Live option trade alerts, December 2023. You can take the 7-day trial. It's only $19 for 7 days at beststockstrategy.com/memberships. December 1st, we bought back 3 of the SPX call options. Then we opened up a new trade in Google, B+ grade. Small adjustment to GLD, where we bought back the 194 and then rolled it to 196 and then financed that by selling 3x of the January 5th 179 put options. Here we also made a minor adjustment. New opening trade, picked up $80. S&P up 27, VIX down 2.2%. December 4th, we made an adjustment to GLD. Last night it was actually up 2.6%. Here we opened a new trade in SPX, picked up $80, S&P down 25, VIX up 3.6%. December 5th, ratio spread in IWM. So we bought a debit spread and then financed it by selling 2x of the 155 put options. New opening trade for SPX, only picked up $60 there. S&P down 3, volatility down around 2%. December 6th, S&P is up around 16. New SPX trade, S&P down 18, volatility up around 1%. December 7th, S&P is up around 29. Google is up around 5%. Picked up around $140. December 8th, S&P up 19. VIX down 5.4% and VVIX down 5.7%. Google was down 1.3%. Nvidia was up 2%. We're trading at a year-to-date high. December 11th, new opening trade. This was a hedge against future volatility and pullbacks. Nvidia is a decent opportunity. New opening trade, picked up $100, S&P up 18, VIX up 2.3% and VVIX up 1.5%. We're trading at a year-to-date high. December 12th, decent opening. S&P is up 21, VIX down 4.4%. We hit a new high today. There is a Fed announcement tomorrow, 2 hours prior to the market closing. December 13th, solid opening. S&P is relatively unchanged. New opening trade in Google. As a spread, you can buy the 105, picked up $46. But perhaps more importantly, I would love to get a signed Google at 119. Picked up $180. The options market is acting weird. The SPX trade from less than an hour ago is now selling for 89 to 90 cents, indicating that the market believes tomorrow will be very volatile. Yet VIX is only up 1% and VVIX is down 3.2%. So I guess volatility overall was mixed, but still, that's a big up move in the S&P to have VIX be up 1%. IWM up 3.4%. Blackstone was up almost 6%. And the futures market has the S&P up around 15. December 14th, solid opening. The S&P is up 20. Volatility is stable. New opening trade, ratio spread, bearish play while financing it with 2 put options. Picked up $1.65 or $165 of credit. Here we picked up $400. I'm not sure why there's so much available premium on these SPX positions given how low volatility is. S&P up 12, VIX up 2.4%, and VVIX is flat. Blackstone up another 7.3%. Tesla up almost 5%. There was a lot of movement today in individual stocks despite the market not moving much. December 15th, ratio spread in QQQs. We bought a debit spread for 375 and 350 and then financed it by selling the 325s. Here we picked up $80. So here you can see that there was a volatility crush in SPX, whereas the day before we received $400 and now we're only receiving $80. I'm unsure why the premium collected evaporated, but sometime between this morning and afternoon, the premium normalized. Over the past 2 days, the premiums were acting like they would if VIX were at 18. I noticed this on Wednesday when I sold the SPX Strangle for 45 cents and then it was trading for $1.10 immediately after the market closed. It was strange, but in any case, the available premium has normalized. S&P about even, VIX down 1.6% and VVIX up almost 9%. December 18th, closing trade for Google. I'm unsure if new members are able to access the trade from December 1st, so I'll resend the original just in case, where it got filled at 39 cents and then we bought it back for 12. Here we picked up $80, S&P up 21, VIX up 2.3%, NVIDIA up 2.4%, Google up 2.5%. December 19th, S&P is up 10. Closing trade for Blackstone, the original is below. Here we picked up around $100 on the SPX Strangle. Here I rolled and managed the VIX cash settled options. I bought back 2x of the 14 put options and then I sold and rolled it out to May, and I reduced the strike from 14 to 13.5. And then I financed it by selling 10x of the 11.5 put options in August. VIX is very low, trading at its lowest level in 3.5 years. It's difficult to roll into the future since the premium available in the future is less, meaning that there's an expectation that VIX will trade higher in the future. If in the future VIX continues to fall and or we can't roll it without adding more contracts, then I'll likely just close it out. S&P up 28, volatility mixed, but not much movement. December 20th, not much movement. FTX, which is FedEx, is down. Bought back 2 of the SPX put options. Open up a new trade in SPX. Picked up around $260. S&P was down 70, VIX up 9%, and VVIX up 3.8%. Today's trading was surprising. There wasn't much warning except for the spike in VVIX last Friday. NVIDIA was down 3%. And we were also up around $5,000 on that day. December 21st, solid opening. I'm surprised the VIX is relatively unchanged. Here I sold a call option and picked up $80. I actually made a mistake because I didn't change the date on the option. And then I sold the put options and picked up $100. So in total, we picked up $180 less commissions. S&P up 48, VIX down slightly. After hours, Nike is down 10%. December 22nd, solid opening. The market is up 25. It's recovered all of its losses from Wednesday. Picked up $100 on the SPX Strangle. Then here's the long message. S&P up around 8, VIX down 4.5%. December 26th, then we're back after Christmas. So here what I did was I opened a ratio spread with upside potential. It was a new opening trade. I basically bought a call and financed it by selling puts. Then on the top, I realized that the 85 was only trading for like 10 or 15 cents. And that if O moved up, then the call option that I sold would appreciate significantly. So I bought it back. So on a net basis, I would simply buy the 65 call and then sell 2x of the 42.5 puts. Picked up $80, trading at a year-to-date high. S&P up around 5, volatility down around 1%. Picked up $80 again. S&P up 7, VIX down 4.3%. This has been a great year for us. last Thursday, or the second to last trading day of the year. S&P up around 9, VIX relatively unchanged, picked up $140. Not much movement. Final trading day of the year. S&P relatively unchanged, picked up $80. I'll resend the long message as a courtesy. S&P down 13, volatility around even. This concludes our trading for 2023. This has been a great year. We outperformed the market, and when the market was down 10% earlier this year, we were up money. My hope in 2024 is that the market is not as bullish, so that we will dramatically outperform. I doubt that the market will have as strong a year in 2024 as it did this year. And at this moment, I believe that the market is still slightly below where it closed on January 3rd, 2022. We had 2 losing trades this year, one in DG, which we handled very well and accepted the loss without trying to fight it, and one in an SPX strangle. I believe it was November 14th when the S&P was up around $84 or $85. We have hedges on for years to come, actually, and more opportunities will open up to us once VIX increases. I hope you have a great weekend. The market is closed on Monday, and we'll resume trading on Tuesday. That concludes December 2023 and all of the trading in calendar year 2023. You can take the 7-day trial. It's only $19 at beststockstrategy.com/memberships. And if you want to learn how to trade, then you can take the education course, or you can subscribe to the live option trade alerts. If you have any questions, then simply leave a comment below.